If you're still here in the trenches holding strong, chances are you'll make it this cycle. It's been a brutal ride, so tough that even multi-cycle veterans have tapped out. Q1 2025 was expected to deliver, but instead, most altcoins are back to bear market levels, down 70 to 80% from their all-time highs. Sentiment is at rock bottom and altcoin performance has been disappointing. But to make it, you have to stick to your guns. In this video, I'll share my current portfolio and the altcoins I'm keeping a close eye on. That should help you refine your own portfolio. Some altcoins are already done for the cycle, and knowing when to cut your losses is crucial. You don't want to end up as a bag-holding community member. Unfortunately, I had a few of those in my portfolio, and as always, I'll be fully transparent about them. No sugarcoating, no hopium, just raw strategy to position yourself for what comes next. If that sounds good, smash that like button to support the channel. And a massive shout out to the community warriors on YouTube and Twitter who voted for this topic. Your voices shape the content and I'm here to deliver what you need most. Now let's take a quick look at the markets. Bitcoin is showing weakness after breaking below the $84,000 support, signaling bearish momentum. A further decline could strengthen bearish momentum, with $70,000 as the next major support. This level previously served as strong resistance before the late 2024 breakout. On the upside, Bitcoin needs to reclaim the $92,000 resistance zone, which has acted as both support and resistance in recent months. Recent price action signals weakness, as Bitcoin failed to hold above key resistance and is now struggling to maintain support. A bearish crossover of the moving averages may have intensified selling pressure, with the bull market support band now acting as resistance. Volume remains relatively stable, suggesting that neither bulls nor bears have full control yet. Bitcoin is at a pivotal level, where the next move will likely set the tone for the coming weeks, especially with the anticipated announcement of reciprocal tariffs on April 2, 2025. The altcoin season index is sitting at 20, a level last seen in September 2024, indicating extreme weakness in the altcoin market. Bitcoin dominance has climbed to 62%, highlighting the sorry state of altcoins as capital continues to concentrate in Bitcoin. Alright, let's get to the business. Back in 2017, projects raked in millions with nothing but a concept and a white paper. By 2021, the narrative shifted to risk-free APYs of 30% or higher. Both cycles ended the same way, retail investors took the hit. The lesson? In frenzied markets, hype outpaces accountability every time. That's why ruthless selectivity in your portfolio isn't just smart, it's survival. Now the bulls are quietly regrouping. History shows that when momentum flips, it does so violently, and we're nearing that inflection point. Before the frenzy returns, trim the dead weight dragging your portfolio down. Stop chasing doomed assets, set clear exit rules for every position, and focus on what's primed to thrive. The silver lining? Most of the garbage projects have been flushed out, clearing the path for stronger altcoins to lead the next rally. If you've been waiting for a strategic entry to accumulate, this window won't stay open forever. Let's break down how I've restructured my portfolio post-dump. The recent altcoin carnage forced a major reshuffle. My portfolio is now heavily weighted toward top-tier projects. While I've held onto my long-term altcoin positions, I trimmed short-term speculative plays to reduce risk. As I mentioned on Twitter, I've been doubling down on DCAing exclusively into high-conviction blue-chip altcoins. Let's take a look at what I'm holding right now. My biggest holding is Bitcoin, but not because I timed it perfectly, it's simply because most altcoin bags have dumped much harder than Bitcoin. It now makes up 27% of my portfolio. That said, I did rotate some altcoins into Bitcoin during the election pump as mentioned in previous videos, and that move worked out well. I sold Injective around $28 and Stacks around $2.30. While Bitcoin is down 15%, Injective has dropped 70%, and Stacks is down 72%. Next, I have Solana as my layer 1 base, making up 9% of my portfolio. I got in around $50, rode it up to its all-time high of $295, and then back down to the current price. I'd still be content holding it, expecting a bounce, but I made a rookie mistake along the way. I sold around 15% of my Solana for WIF and Popcat, and let's just say those positions aren't looking great. Meme coins have been obliterated, and the so-called meme coin supercycle feels like a meme itself at this point. I'll hold them until I see a respectable bounce to offload. As for Solana, I'm holding it for the cycle and still believe it has another 3 to 4x in it. In my previous portfolio video, I had a very small position in ETH, under 5%. Currently, it makes up 9% of my portfolio. That's partly because other alts have bled heavily against ETH and also because I added some around the $2,000 range. I believe it has bottomed against Bitcoin, and I don't see much downside from here. There's no denying that ETH has been a disappointment this cycle, but the utility run is imminent and ETH will lead it. Institutional bids are on the horizon, with 21 shares proposing to add staking to its Ethereum ETFs. Trump's World Liberty Financial keeps buying ETH, and there's a reason for it. Even though ETH is down significantly since Eric told us to buy, I remain bullish long-term. Big things are coming. Next up, I've got 6% in NEAR. Like most altcoins, it is down 60% from the inauguration pump, which brings it back to 2024 lows. However, I'm still bullish on it as both a layer 1 and an AI play. I got in around $3.50 and it's currently trading near $3. I would look to add more around the $2 region if we revisit that level. If we get another AI pump like in 2024, NEAR will likely benefit from it. As a large cap altcoin, it is a safer bet on AI compared to most low to mid cap altcoins. It's a reflexive coin. It dumps hard when the market is down but pumps aggressively when the market rallies. Having some exposure isn't a bad idea, but invalidation levels should be based on individual risk tolerance. It's obvious people are getting tired of getting rinsed in meme coins. Even presidents are rugging now. Since the launch of the Trump token, Bitcoin has dumped 18%, and 99% of meme coins are down at least 70%. My portfolio took a big hit due to the meme coin wipeout. I hold WIF, which makes up 5%, while Popcat and MOG account for 3% each. I also have some smaller positions that total up to 2% of my portfolio. At this point, I'm not looking to add to my meme coin positions. In gaming, I'm still holding 2 positions that are deep in the red: Beam and Echelon Prime. Beam makes up 6% of my portfolio, while Echelon Prime accounts for 4%. Selling at this point doesn't make sense, so I'm holding since I remain long-term bullish on the gaming narrative. Gaming hasn't had any real run this cycle, but since both are established projects, we can expect a bounce when the market recovers. Beam is more of a gaming infrastructure play similar to Superverse. I had bought Super earlier as a short-term trade but sold it for a minor loss after invalidation. Since I exited, it has dropped around 50%. I'm still holding Tau as my AI bet, and I remain bullish on it. It makes up 4% of my portfolio. Tau combines AI with blockchain to create an open, scalable, and censorship-resistant ecosystem. With AI and crypto emerging as high-growth sectors, decentralized AI is gaining traction as one of the hottest narratives in Web3. I also hold a basket of smaller AI tokens, but they tend to get obliterated when the market takes a hit. This is why understanding your risk profile is essential. Avoid overexposure to micro-caps. In RWA category, I still hold Pendle. It makes up 3% of my portfolio. It's down, but since I got in early at around $1.10 in December 2023, I'm holding. I previously held Goldfinch but exited due to the team's poor communication. Luckily, I got out before the dump and haven't looked back. I've also added Ondo, which I believe is the leader in the RWA space. It accounts for 4% of my portfolio. Ondo bridges traditional finance and DeFi, making securities as easy to trade as stablecoins. Its Ondo Global Markets platform tokenizes US stocks, bonds, and ETFs, backing them one-to-one with real assets. This brings on-chain efficiency, 24/7 liquidity, and institutional-level access to everyone. I've exited some short-term positions in Hype, Celestia, AIxbt, and a few smaller ones. If we see a deeper dip, I'll be looking to add more ETH, Ondo, and Celestia. Apart from this, I'm holding 12% in stables. My Bitcoin and stablecoin allocation has grown as most altcoins have taken a hit. I also converted my Pengu and Jupiter airdrops into Bitcoin instantly. When I exit a project, I usually swap into Bitcoin, using it as dry powder to scoop up cheap altcoins during dips. Sometimes, dips keep dipping and I cut losses after reaching invalidation. During heated rallies, I take profits off the table and redeploy during flash crashes. It's easy to get carried away when your portfolio is growing fast in a bull market, but discipline is key to long-term success in this space. I'm seeing a lot of people in the space right now convinced that the bull run is already over and that we're heading into a bear market. While the market pullback over the past month has been brutal, I strongly believe we still have a long way to go. This is my 3rd cycle, and I've seen these same sentiments in both previous bull runs. That said, I have to admit this cycle is different, and we're most likely witnessing a lengthening cycle. I'll be making a full video soon explaining my thesis, so make sure you're subscribed. And if you've made it this far, support the channel by liking this video. See you in the next one.